Hello investors, it's Zil from Equitymaster bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. In today's video, I'm going to talk about some undervalued solar stocks in India. You see, the solar energy sector is witnessing unprecedented growth as the global push to clean and sustainable energy accelerates. Governments and corporations are investing heavily in solar infrastructure, driven by the urgency to combat climate change and meet ambitious carbon neutrality goals. While many solar stocks have surged in recent years, there are still many hidden gems in the market. These are companies that remain undervalued despite strong fundamentals and promising growth prospects. In this video, I'm going to talk about the top 5 undervalued solar stocks that deserve a spot on your watch list. These companies are not only well positioned to capitalize on the renewable energy boom, but are significantly cheaper compared to their peers. By the way, these stocks are filtered using Equitymaster's powerful stock screener. Before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that disclaimer out of our way, let's get started. First on the list is NTPC, a leading power generation company in India engaged in the generation and sale of electricity. The company has a diversified portfolio of power generation sources, including coal, gas, hydro, solar, and wind. It has strongly committed to renewable energy and aims to achieve 60 gigawatts of renewable energy capacity by 2032. The company has a wholly owned subsidiary, NTPC Green Energy, dedicated to renewable energy projects. At the current price of Rs 323, the stock trades at a PE of 15, which is lower than the industry average of 18. The PB of the stock is 1.7, well below the industry average of 2.6. At these valuations, the stock is giving a dividend yield of 2.6%. Coming to its financial performance, the company boasts a 5-year average return on equity of 12.1% and a 5-year sales compound annual growth rate of 12%. Similarly, its net profit has grown at a CAGR of 11% over the past 3 years and at a CAGR of 20% over the past 5 years. The company's stock price has had a good run until September 2024. However, after the IPO of its green energy arm, NTPC Green Energy, the stock price has been continuously falling. Looking ahead, NTPC has a significant capacity addition plan in both thermal and renewable energy. The company plans to add 16.8 gigawatt of thermal capacity directly and support state government utilities in another 7 gigawatt. Key projects in the pipeline include Singrauli for 1600 megawatt, Sipit and Darlipalli for 800 megawatt each. The company also expects to commission 2.7 gigawatt of thermal capacity in FY25 and 1.46 gigawatt in FY26. Its subsidiary NGEL plans to add 3 gigawatt in FY25, 5 gigawatt in FY26 and 8 gigawatt in FY27, resulting in an operational capacity of 19.4 gigawatt by FY27. NTPC has secured PPAs for 16 gigawatt of renewable capacity and is working on securing PPAs for another 11 gigawatt. Do note that the profitability of NTPC is sensitive to coal availability and prices. The company is taking steps to secure coal supply through captive mining and imports. Moving on, the second stock on the list is Madhav Infra Projects. The company's primary business is infrastructure development, particularly focusing on highways, urban infrastructure, and energy. It operates as an engineering, procurement, and construction contractor and developer for projects across India. The company also develops and operates solar power projects and undertakes operations and maintenance of road, solar, and hydropower projects within the Madhav Group. Madhav Infra Projects serves as the in-house EPC arm of the group. Coming to its financials, the company has had a 5-year ROE of 5.5% and a 5-year sales CAGR of 4%. The 3-year sales CAGR stands at 10%. The company's net profit has grown at a whopping 53% CAGR over 3 years and 44% over 5 years. The significant difference between sales and profit growth can be attributed to the asset-heavy nature of the business, which gives operating leverage after a certain point. Additionally, there were exceptional other income gains in few of the years between the 5-year and 3-year periods. However, profitability has declined year over year in FY24. This was due to reduced solar power generation income, and at the current price of Rs 14, the stock trades at a PE of 20, which is lower than the industry average of 36. The PB of the stock is 1.8, well below the industry average of 4.6. The company has had a very volatile year when it comes to stock price performance, with its 52-week high being 23.9 rupees and 52-week low being 8.75 rupees. Going ahead, company's weak financial performance can change as it has been actively expanding its presence in the solar energy segment, reflected in the growing order book. As of 30th June 2024, its order book stood at 980 crore rupees, a significant increase from 660 crore rupees at the beginning of FY24. Solar projects now dominate the company's order book, comprising 77% of the total order book. This highlights the company's strategic focus on capitalizing on the growth opportunities in India's renewable energy sector. The remaining portion of the order book is distributed among railway overbridges, bridges, and roads. At number 3 comes Reliance Industries, the largest private sector company in India. Reliance is a conglomerate with business segments in oil and gas, retail, and digital services. It has set out on an ambitious journey to become net carbon zero by 2035. Reliance believes that India will play a leading role in transforming the global energy landscape as one of the biggest energy markets in the world. To achieve this goal, Reliance is increasing its foray into solar energy. The company is developing a 5,000-acre green energy complex in Jamnagar, which includes 5 gigawatt factories for solar PV, energy storage, electrolyzer, fuel cell, and power electronics. Coming to the company's valuations, at the current price of 1,251 rupees, the stock trades at a PE of 24, which is lower than its 5-year median PE of 26.5. If we look at the price to sales ratio, it is trading at 1.8, whereas the 5-year median has been 2.1. This is of course because of the recent price correction that the stock has witnessed. Despite the poor price performance of the stock, the future looks promising. Over the years, the company has made significant strides in the establishing an integrated solar PV manufacturing ecosystem, including obtaining BIS certification for solar panels manufactured in Jamnagar. Reliance aims to be the largest renewable energy developer in India. It has been allotted land in Gujarat for this purpose and have signed their first RE power purchase agreement with MSEDCL for 128 megawatt for 25 years. Reliance plans to establish 20 gigawatt of solar capacity by 2025 for its captive needs, including RTC power and intermittent energy for green hydrogen production. It has made strategic acquisitions and partnerships with leading firms in solar power, batteries, and electrolyzers. These collaborations give the company access to technological expertise, talent, and a self-reliant supply chain. Fourth on the list is Swelect Energy Systems, a global provider of solar energy solutions with over 40 years of experience in power conditioning systems and renewable energy. It specializes in solar power projects, producing solar and wind energy, installation, maintenance, and contract manufacturing services for solar photovoltaic inverters and energy-efficient lighting systems. Swelect Energy Systems has a multifaceted business approach, engaging in all verticals of solar power like manufacturing, solar power generation, systems integration, open access power solutions, and in addition to these core businesses, Swelect Energy Systems also offers solar water pumping solutions, servo stabilizers addressing voltage variations and electricity fluctuations. Solar energy storage solution is a new vertical. At the current price of Rs 934, the stock trades at a PE of 22, which is way lower than the industry average of 139. The PB of the stock is 1.5, well below the industry average of 10.4. The stock has been very volatile in the last 1 year, but the company has continued to make strides in growing its revenue and profits. Looking ahead, the company seems ready for its first leg of growth. It has successfully commissioned a solar power plant having the capacity of 7 MW at Pisanathur village and Pudunagar village at Pudukottai district of Tamil Nadu on 1st October 2024. The last on this list is NHPC, an Indian government-owned company that primarily generates and sells hydroelectric power. It has been in business for over 48 years and has developed 22 hydroelectric power stations. It also operates 1 wind power project and 3 solar power projects through subsidiary companies. NHPC is actively expanding its solar energy segment. The company aims to develop solar power projects both independently and through joint ventures. It has signed agreements to procure 2,000 MW of solar power, earning trading margins through this initiative. It has also commissioned an 8 MW ground-mounted solar project and is developing an 88 MW floating solar project. The company has a strong financial position and is looking to expand through diversification, particularly in the renewable energy and green hydrogen sectors. At the current price of Rs 77, the stock trades at a PE of 29, which is higher than the industry average of 18. But this can be attributed to the expected increase in profits on the back of new projects that the company is undertaking. The PB of the stock is 1.8, below the industry average of 2.6. The stock has seen a good amount of correction in its price from July 2024. In FY24, the company registered a year-on-year decrease of 9% in its revenues and its net profit also fell by 5%. But this is expected to change in the coming years as NHPC expects to commission approximately 2,500 MW of generation capacity by the end of FY25. The commissioning of these projects, particularly the Subansiri Lower and Parvati projects, is projected to significantly increase profits, potentially reaching 5,500 to 6,000 crore rupees. In the long term, it has a target of 5,000 MW of added capacity in the next 3 years and at least 25,000 MW in the next 7 to 8 years. So there you go. These were some of the solar stocks that look undervalued at the current levels. Here's a quick view of the above-mentioned companies based on some crucial financial parameters. In conclusion, investing in undervalued solar stocks seems tempting given the opportunity size as the world shifts towards renewable energy sources and tries to address climate change. However, investing in solar stocks also carries inherent risks. The solar industry is characterized by intense competition and volatile commodity price, which can impact profit margins. Factors like increased exports from China and imports from countries with trade agreements can pressure margins. Additionally, technological advancements can quickly render existing technologies obsolete, requiring companies to constantly innovate to remain competitive. Therefore, it's important to conduct thorough research on financials and corporate governance before making investment decisions, ensuring they align with your financial goals and risk tolerance. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. For more details on this story, check out the full coverage using the link provided in the description below. This is Zil from Equitymaster. Thanks for tuning in.